What a day to join us here at Sin City Crypto. We are so excited for today's show. The question of the entire week so far. And it's been an early week, but is the bull market over? Now, I know it's a question that people have asked multiple times, but there is one analyst from CryptoQuant that posted multiple charts and indicators and emphatically said that everything is pointing to that the bear market is here. And so we have Magic Internet Money joining us. He's going to break down the charts. We'll take a look at from a structural standpoint what Bitcoin's telling us. And then after him, we got Mark Yusko joining us. I'm going to ask him his thoughts on what Treasury Secretary Scott Bessent said. I'm going to ask him on his thoughts of whether the bull market is over. We'll talk a little bit about Ethereum. Does he have any hope left for ETH? And what is one sector he believes can push crypto back into that upward price action that we've all been waiting for? We have that and much, much more on today's episode of Sin City Crypto. Let's go.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto, home of the entertainment and price prediction focused cryptocurrency channel where we take old, boring, and stale information and price predictions and package them up in a fun and sexy way. That's right. We are here, and you know what? I feel even more comfortable that we won't go under 80K. And it's strange because we're closer to 80,000.
You are very strange.
And the reason being is that if we're going to have a sell-off, if the NASDAQ is going to drop 2% in the morning and we still don't even sniff 80,000, then
it was a Joe Biden sniff, but it was still a sniff. We're at 81.
Yeah.
Either way, before we get into anything, I want to give a big thank you. Today's show is brought to you by Legacy Network and the Legacy Academy app. The best learn-to-earn app in the entire space. You can earn their LGCT token while you're learning about certain things like your personal life, your business life, your health life, your other life. There's a lot to do on the Legacy Academy app. Download the app on Google and Apple Play Store and then join their Telegram to stay up to date. That link is in the description of this video. With that being said, I'm going to bring him on, man. Magic, welcome back. It's Magic Tuesday. It's an honor to have you again, my friend. I can't ask you the same question I asked you last week, right, Magic? I just can't do it.
Yeah.
I can't. So I'm going to just regurgitate it in a different way.
Is ETH dead?
No, we're not talking about ETH yet. We'll talk about ETH with Mark Yusko, okay? Because I'm curious to get his thoughts. But Magic, I don't know if you saw that post from Ki Young Zhu, and I'll pull this up here. This is I think the lead research over at CryptoQuant. And so he posted this, said, bull cycle is over, expecting 6 to 12 months of bearish or sideways price action. The first chart he has up here is the P&L index cyclical signals, which I'm not very familiar with. The other one is, it says, every on-chain metric signals a bear market with fresh liquidity drying up. New whales are selling Bitcoin at lower prices. And then he posts these charts. But what are your thoughts? Anything you're seeing, Magic, from last week to this week that's kind of changed your stance to maybe a better outlook, a worse outlook? Are you kind of on Rob's thing where, hey, the NASDAQ is down 2-3% and Bitcoin's still above 80K? That's a positive, or what are your thoughts?
I am still kind of in a neutral spot, but I do still lean, I wouldn't say heavily, but I lean probably more skewed towards this is it. Ironically, my brother sent that to me, that chart you just showed like an hour ago before the show.
Yeah, we talked. That's why I text him on the side. I was like, hey, let your brother know we're going to talk about it.
He texts me and he goes, I hate when you're right. It happens too much. And I said, what do you mean? He goes, it's over, isn't it? And I go, I don't know about that. That's too early to call, but it's getting close to being able to. So you're asking if anything has changed. And realistically, all that's really changed for me is one, we're holding key support, so we can't get too bearish. But there is something that your audience can keep an eye out for going forward. That's a very high time frame, like a monthly chart. And it's a very easy way for them to kind of grasp what's going on. And we covered it in the group, but I want to make sure I also cover it for anyone that's watching at home. So in terms of like monthly pivots, we talk about this a lot. These are the averages of the prior months. So this number here is equated to this price action, right? It's a 3-number sequence, high, low, close divided by 3. That's how you get this. You can change that in the settings. I just prefer this one. The reason I'm bringing it up is a lot of times when you have consolidations, and I'm not going to go too far back, but you could literally go all the way back on this chart. And that's what I did to show them every single example because it happens at every single junction. This is your opening range pivot, as you notice here. This is going to get tapped, but notice how the pivots inside of this range, while they look like they're trending down, you are holding that, we'll call it higher low. Okay. Then the trend continues and you are now reaching your next pivot, which is over here, right? So this is our pivot on a monthly basis. So monthly closures and averages, high, low close divided by 3. You can see that we've closed just above it, not damning at all. We've done that several times throughout this run. It's actually pretty common through consolidation. That's why I always tell people, don't get too bearish just yet. Wait for confirmation. Another really good example is over here at about 25K, right? You can see that these do start to trend down. However, you are still holding that initial monthly average that started the consolidation. In this instance, we're really flirting with it, and we are coming up to the end of March. And I would really start paying attention if, I was sharing that bias, or I was looking for some kind of a confirmation for a move lower, because once this goes, you're now looking at a confirmed trend change potentially in terms of monthly averages. And so when you see a high time frame like that start to turn around, that doesn't just translate to a quick wick and flash crash. That's usually months, of downside at that point. So that would be really it. And if you want, you can actually project for it. There's, we made an indicator, shout out to T-Bone, modified it for me so that we could project where the pivot's incoming based on current price action. And so as of right now, it is projected to come in here about 84K, which would be below that structural pivot, implying at least a back test of this old structure. And then really comes that, are we going to get some kind of a new trend continuation where these are forming to the downside over time? So, that's the real neutral outlook on it. Also, we talked about it last week. I think we were both of the sentiment that we wanted a little bit lower still. If I could find, there it is, macro low to high. You are front running the 382, which is for anyone that likes Fibonacci, it's a golden fib. That's the inverse of the 618. So a very important fib. I have the 2.5 and the 2.36 up here only to show that it was in confluence with this area as resistance, and that if we were going to see strength, we have to live above it, which also puts you back above where the monthly pivots that we just spoke about, and this would trend higher with it and potentially kind of nullify what we just talked about in terms of a trend beginning. So the 382 to me is still there. It doesn't mean that we won't get a good bounce out of it. Typically, they're very strong. It's also a back test of 73K. And that really would be kind of the hopium, because we've talked about it in other instances as well in this show, that when we go over to, I believe it's this one, yeah, and I was working on a strategy, so we can disregard that. But if it comes to something, maybe we'll cover it here. The pivot squared zone, this is your 6 month and yearly average. So taking that monthly average and then just multiplying it to 6 and 12 months, post halving, if you fall below this zone, which we're sitting squarely on, it kind of also goes in key with those monthly averages and saying that we've never gone below this area and closed there on even a weekly basis and maintained a bull run. So, this is a very pivotal time for Bitcoin. So if there was a move to that 382, this needs to be recovered quickly. Otherwise, my bias would be this line right here, which is pretty close to the overall gold pocket, because in every instance that we've given up this dual pivot zone after the halving, we've at least hit the gold pocket as the first target, which would be somewhere between $48,000 and $52,000. So, yeah.
Okay.
That's it. Not to be a Debbie Downer, but
no,
it's just the TA.
Here's the thing. It's not about being a Debbie Downer. It's how you interpret the data, right? So if you look at the data one way and another person looks at it another way, you can't, what are you going to do? Hey, don't look at it that way, or the chart's saying a certain thing. So I don't give a shit if I agree with someone or don't agree with someone. Their opinion is their opinion. So people want to throw a fit. Cool, man, throw a fit. But at the end of the day, it's people's opinions. No one knows what the hell is going to happen. What if tomorrow might come by and China and the US say we're going to buy 1 million Bitcoin, and then the entire structure of everything changes? No one knows at the end of the day. No one has any idea.
True.
It's how we interpret the data that is presented in front of us. With that being said, one of my favorite charts right now, narrative and bearishness aside, is XLM. XLM on the daily has this massive falling wedge. It's trading right at that 200-day moving average. And it looked like it was going to break out, like that 27.5 cent level. What are you seeing on the XLM chart there, Magic?
This is one we haven't touched since we talked about it last time, if you recall. We drew this chart up. We designed it off of the 12-month, I believe, time frame right here. And so what we'll notice is that, yet again, this highlighted zone here between the 2017 high at 37.36 cents was not held as support. In fact, you bounced off of it and got rejected at the gold pocket. I believe we had that isolated as well. Yeah, right here. So you made a move into it, which is just a lower high. And our target was going to be the subsequent gold pocket at the 12-month level here. So you can see this is where they settled up in 2021, before making its move in the bear market. It's a big level because, if lost, you are heading to 19 cents. It could range here for sure. I see what you're talking about, falling wedge. You really have to confirm a low here in order for anything to play out. And that would imply moving back above that 2017 high to me. So you are at support. You've actually already tagged it once, come back to that resistance, come back to support. If this support goes, I do think you'll probably fall lower to like 19.5 cents over time. So this is a fairly important area on the chart. And, I'm going to get rid of some of the stuff here because I think it's probably a messy chart when I zoom out a little bit. But the reason I want to use these high time frames is to really illustrate where people should be looking. So we can definitively say that this is an important zone that we're at. Yes, you have a falling wedge potentially into support. So you never want to fade something like that if that's part of your edge. But be cautious because below here, the 2023 high is very likely where you're heading. And I'm going to get rid of the median real quick, which is essentially the 2023 high. So just kind of cleans up that middle zone here. But typically when you come out and you deviate large ranges like this, you'll come back to the EQ. So I would expect to see probably 19.5 cents over time unless strength enters the market. Early sign of strength is the yearly open. That yearly open at 33.2 cents is going to be like that real early sign that, okay, maybe things are turning around. Obviously, you want to see that translating with Bitcoin and maybe even Bitcoin dominance in this case. Because if Bitcoin dominance is not coming down, I don't see these alts having a great time. But if it fails here between 19.5 and 26 cents, this is a wide zone of support. But you can see if we just slide this over, maybe if I can get my mouse and hands to work, as we're looking at this, anything below here, and you're essentially targeting sub 10 cents again. If you're a value investor and saying, I want to continue to trade this, it makes no sense to buy below here until you're back at support realistically. So that's all I would say is be a little cautious. If you're a dollar cost averager, maybe understand that that could happen. It might not happen that way at all, so plan for these things, have areas of invalidation. And if 26.8 cents is lost here, your next key level is probably either A, the overall low of 2025 at 22.6 cents down to 19.5, or if you're a little more, risk adverse and you want to be extra conservative, you can either A, wait for strength to show itself on the chart, or B, wait for these targets down below. Very similar to me of how I view Kaspa. I know you said in our text, pick a coin to look at, and that would probably be the next one I wanted to look at, is because you've got a very big Kaspa community, and we've talked about this one. But I will say, if you get above 37 cents and you can maintain that for like a monthly, quarterly, things start to look a little different. And then you start targeting these highs. And you're targeting the high here at 64 cents. Then you're targeting the next one. That's realistically the only targets you have. And you're looking to see if this thing breaks out and makes new highs. And then everybody can laugh at me on this show and say, well, he was wrong. And I hope I am, because the market is much more fun when people just make stupid amounts of money. But it doesn't always go that way. It does for a while, but it doesn't last forever. That's unfortunate. But Kaspa, very good chart overall. The problem with it is it's been in a downtrend. It's been showing weakness. You know that we've been talking about this box here. I'm going to get rid of this for just a second and this for just a second. We've been talking about this support, and if lost, it would be an issue. So you need to see strength re-entering this chart, which essentially is a reclaim of this box at the 2024 low, near the 2024 open as well. But somewhere between 9 and 10 cents needs to be reclaimed on this chart. And if it is, you're essentially back inside this structure in this range. This is a big deviation, and you're targeting a full rotation. And a rotation can be looked at in a number of ways, whether you're looking at it from a structural rotation, or if you just want to do something as simple as saying, well, we deviated this and I want to know, where is the value area high, conservatively 16.5 cents. You'd be looking for something like that, especially with the point of control sitting this low. But for Kaspa, the next opportunity is something that we spoke about on this channel of a doomsday worst case scenario. And we're getting very close to these targets. And the way I've instructed it in the group, I think it was a couple weeks ago when we were getting this bounce, is, I'm not a believer in catching a falling knife, and that is going to bite us in the rear end a little bit here and there, because there are going to be times where things just V-shape recover, they hit this level and you don't have time, and it's like, oh, I missed out. But in this case, we need to see strength re-enter the chart before we're ready to do something like that. In my opinion, it's okay to be late to a move. You might be sacrificing a few percentage points, but your, accuracy and likelihood of, generating revenue from that, potential decision goes up. So it's a trade-off. But in this case, I'm waiting for my targets down here, which you were talking about harmonics with me a while ago. This is a large-scale shark reversal pattern. These are very good in most cases. So, we're looking for, do I have a box for this one? I didn't draw one up. But we're essentially looking for the 886 of X here, right? And we want at least a 1618 expansion, which is giving you both of those, which implies that we would probably fill these NPOCs left over from the move up and backtest this structure. And I change my mind if I see strength entering the chart. So this would be the area that I'd start looking for opportunities, that if I had a system in place, like I'm looking for daily swing failure patterns, or I'm looking for bullish divergence on X time frame, or maybe it's liquidations or whatever it may be, this is the area to start really looking at it and saying, okay, should I be interested here in terms of a dollar cost average or a trading strategy? So
what is that?
Kaspa is one that I've got my eye on. What's that?
So what is that? What is that price range there?
Okay, so it goes from about, this extends a little bit lower to like 3.2 to complete that pattern. They don't always complete perfectly, but somewhere right around 3.9 up to, we'll call it 5 cents. I would err towards the 4 cent range if I was just looking for like a nice medium number. I would target this low right here and say we're probably going to take that unless I see some strength in the market, which you could say is a reversal of whatever trend this is on the daily, meaning we confirm a daily low by making new daily highs and higher lows to find our way back in the range. Or I'm waiting for these prices, and if God forbid this level doesn't hold, you'll see these, and that's doomsday-esque. And I don't think that's worth talking about at the moment. So for now, the opportunity is around this region. As we reapproach these lows, I think we will. I think that's where the opportunity is going to be if there's going to be a reversal on this chart. So
awesome.
Yeah. Kaspa's a good one though.
Yeah, I was looking at the Kaspa chart, I think yesterday on my stream, my afternoon stream. I kind of want to ask you one more question, Magic. Do you think So I think we all agree that, well, at least me and you agree, that there's still a little more downside to BTC, and maybe the bottom's not it. Maybe 76K or 78K wasn't the bottom. Would you say that Bitcoin is closer to a bottom than the NASDAQ or the S&P or the Dow Jones?
No.
No?
To be honest with you. The only reason I say that is even though they are very extended, let me see if I've got it underneath this folder. There were some sell signals that have gone off on traditional markets, and they've hit really, really big targets for me. And so I am expecting from last week, probably like another 5% out of the market coming into this week is what I think I had planned. Let me get my chart.
You're talking about the TradFi markets, right? Another 5%?
Yeah, that's what I was looking for, at least on SPX specifically, which would also probably correlate pretty handedly with something like the Dow. So coming into this week, I was thinking that as we opened here, we'd probably see something like an additional 5%, which could put you all the way down into this range before you're seeing something like that. And in reality, this is still kind of a higher low and an uptrend, because this chart is fairly ridiculous. Overall, it's ridiculous long term when you look at it, but this has just hit really major targets for me. This was the reversal pattern. We've covered it on this show. We've covered it in other shows for years. And these were the major targets of this, was this blue box. So just because I'm looking for that doesn't mean it's going to happen, but it is something that I'm actively looking for. And again, I would stand corrected on a chart like this if price maybe reclaimed the current week's high or the previous week high right here and started showing some strength. You're back inside the structure, and we can talk about at least some form of a rally to probably like a gold pocket area. But realistically, this one's showing a little bit of weakness as well. It doesn't mean, hey, COVID crash style thing. It's just, I think that the low that came in, it was an okay low, but I do think that there's going to be a little bit more downside before they find it. And a lot of people were calling bottom, which is a big deal when people are just calling bottom left and right and everyone's a genius. Market doesn't always work that way.
Sure.
unfortunately.
My
But,
brain
that's
does.
just what I think.
I work that way.
Robin is the market. Robin is the market.
That is right.
I would believe that. He's been nailing ETH all year. He's been proving me wrong. I gave ETH all this credit, and Rob's been over here,
To be fair, everything's down. Okay.
I did. Yeah. Well, one thing that doesn't come back up.
Anyways.
It's like you sprayed that weed and it's dead. So, I was just going to say that. Last week I after the 77,000 where we came down and hit that, I was like, you know what? My personal sentiment, charts outside, I think that was kind of the bottom, right? For a local bottom. And anything's on the table. I'm not saying that it's guaranteed, but I felt pretty comfortable with when I saw that hit. I was like, you know what?
Which means the bottom's definitely not in.
No.
Magic, we appreciate you joining us, my friend. Thank you so much as always. Always appreciate your insight. Guys, we're going to prompt the Discord link to Magic's Discord. Highly recommend you guys go jump in there. Him, his business partner, Max, and then their community as well. There's a lot of great insight in there. Go hop in there, and we'll see you next week, Magic.
Yeah, before I go, last thing I'll say is happy birthday, Alex O. He's in your chat. It's his birthday today. Good dude. So
I love
everybody
Alex.
send him a DM.
Alex. And he just hit 10K subs on YouTube too. So Alex, happy birthday, my friend. Also, it's my wife's birthday too. So babe, if you're watching, happy birthday. I love you.
Happy birthday to her too.
Yeah. All right. Well, Magic,
thanks, guys.
Thank you, brother. Appreciate it. And we'll see you next week.
See you.
All right. No, I found something very interesting here.
It's funny. We see the same. Well, obviously we share the same account, but go ahead.
Yeah. So this is Crypto Bros here on his application puts 6, no experience. There you go. I think
okay. I'll be honest with you. I don't remember what age I was, but I remember seeing one of those applications. It was probably when I was like 12 or 11. I thought the same shit. I was like, well, what do you mean sex? Like, I don't have sex.
Yeah, but the guy is 21.
So
you were 12.
Fair enough. Thank you, Rocker. I appreciate that. Actually, giving me some credit here. Rob, I kind of want to ask you. I want to ask you about the same thing I showed Magic. This analysis from CryptoQuant showing some indicators that he's reading or that are flashing, hey, the bull market's over. It's a bear market, all signs, no liquidity. Bitcoins are selling at lower, new whales are selling at lower prices. What are your kind of thoughts and how much weight do you put on some of these indicators? Go ahead. My question.
Well, what's driving the markets nowadays? Institutions, traditional investors from Wall Street, and now there's a government narrative. And so the economy is really what's going to drive the market now. I think from the past, we can look and say, hey, the halving cycle, supply shock, does that play a factor? 100%. Not saying it doesn't. But I think that at the end of the day, if the overall economic situation is dire, right? And if we're not making new all-time highs in the S&P 500 and the NASDAQ and the overall indices, then I don't expect Bitcoin to do the same. Now, if we go over a long enough time period, I think that Bitcoin will outperform the U.S. economy just because of dwindling supply and a call for demand. But I would say it's going to be slow grind up and to the right. If you look at gold a lot of times explodes and then takes a long time for it to make the next move. Now, gold's been around for, eternity. And so, it's
calm down, Peter Schiff.
We're talking about Bitcoin here, which is a new asset. But at the end of the day, I think as Bitcoin matures, you gotta think of it this way. It's going to consolidate for long periods of time, the same way that any large commodities do. And then you'll have breakouts. And that's just because the supply is finite and the dollar just keeps getting printed to infinity. And so you see it with house prices, right? Houses, they stay pretty stagnant. They trade, they consolidate. And then you get these big breakouts when these housing market booms. I think the same is going to happen here with Bitcoin. And I think that with the indices and the economy, the S&P 500 and NASDAQ, pulling back, not making new all-time highs, I think Bitcoin's in the same category. If we do go through a long, prolonged bear market in the U.S. economy, Bitcoin will break out. Just maybe it won't follow the 4-year cycle. Maybe it'll be a little bit more over time. You have to look. So much money in ETFs, so much money from traditional investors, so much money from institutions. If the U.S. markets are down, if the global markets are down, I find it hard to make a case that Bitcoin is going to break new all-time highs, go into price discovery, hit this 6-figure Bitcoin, this $200,000 Bitcoin. Economy's down, that's not going to happen. Maybe in a long time window, yes. Shorter time window, no. But I don't think that we're in a bear market with the U.S. economy, and I think that this is a pullback. So I say to you, people that are concerned about the price of Bitcoin, the S&P 500 will bounce back. The U.S. economy will rally. The tariff scare will dwindle. It'll subside. The Fed will cut rates. The economy will rally, and Bitcoin will break new all-time highs. There you go.
Wow.
I said it. You heard it here first.
I'm curious to get one person's thoughts. So, Mark is one of my, if not my favorite guests on this show. Every time he comes on, we have such a good conversation. And these live shows that Mark comes on, I usually go back and watch them a few more times because it's like that movie where every time you watch it, you pull something new out of it. And it's the same way every time we bring him on the show.
Do you know how many times I watched Top Gun back when I was a kid?
The new one?
The old one, the original. I drove my brother and sister crazy because I kept putting it on repeat over and over again.
Insane. Well, Mark Yusko is joining us today. Mark, welcome back to the show, my friend. How are you?
Hey, doing great. Thanks for the kind intro. And, I'm up to number 21 on Maverick, on the new Top Gun. I've watched it 21 times.
It's so good.
Magic number. Here we are talking about Bitcoin. Most Saturday nights, I just hit start, and it's just an awesome movie. The original was amazing. I watched that dozens and dozens of times over the years, but the new one, I think, is even better, believe it or not.
Amen to that. Such a good movie.
I saw it in theaters. I haven't checked it out lately, but
good.
Yeah.
Oh, it's so good. And it's just so good on every level. The story's great. The acting's great. I mean, it's just great.
It's a great movie. Mark, I'm so happy to have you on today. When your assistant booked your slot, I originally thought she booked it on FOMC day. And I saw that it was the day before FOMC. I was like, perfect. Everyone's trying to figure out what the Fed's going to do. I kind of want to start in macro, the economy, then we'll work our way into crypto. I want to share this article headline here from NBC. Treasury Secretary Scott Bessent says he's not at all worried amid stock market sell-off. He went on, I think, at Fox Business with Maria, I forget her last name, Bartiromo. And he's like, look, I can't guarantee that we're not going to get into a recession, but I mean, I don't take much away from that. No one can really guarantee anything. And then we had this as well. Gold is continuing to make all-time highs. And so a lot of investors look to this and say, it's a signal that there's trouble ahead. And then I know you look at charts as well. This is the NASDAQ chart. Couple things. One, this 3-year trend line has officially broken. Also, the ribbon here is a 200-day moving average ribbon. And we've officially not only broken below it, but failed to reclaim it as well. What are your thoughts on the macro? What's your outlook for, let's say, the rest of the year, 2025? Do you think the markets are extremely overreacting to Trump tariffs 2.0? What's your kind of gauge on the markets?
So many important questions and great topics, and I'll kind of try to knock them off in order. So look, we're definitely in a slowdown. Whether we tip into recession remains to be seen. I mean, just look at GDP now. The Fed, Atlanta Fed, GDP now went from +4. It was saying we were going to grow 4% in Q1 to -2.8. And now it's rebounded to -2.1. But a negative GDP growth in Q1 as a result of the crackdown on fiscal spending. I mean, here's a crazy, crazy stat. Over the past 5 years, 80%, or maybe 75, doesn't matter, one of those two, presenting 75% of GDP growth was fiscal spending, just deficit spending, just the nonsense that was happening in Washington that Doge is exposing. And so you reverse that, you're going to have an economic slowdown, full stop. And, when Scott Bessent, I think Scott Bessent is amazing. I've known him 30 years. We've invested with him, when he worked at Soros and then when he came out on his own. Brilliant guy, super talented, not the type of guy you would think would take that particular job.
Right.
Although that's not true. That is not fair. It's the one job where they do get really, really talented people. You look back in history, there have been a lot of talent. There have been some bad ones, but there have been a lot of very talented people that took the Treasury Secretary job, because they get a tax break. But at the end of the day, we're going to have a pullback. I can't say it's necessarily a recession yet, although probability of recession has spiked, well into the high 70s. And okay, what does that mean? What does that matter? Well, you showed the perfect chart with NASDAQ breaking down. The problem we had was we were in a valuation regime in risk assets, stocks, that we'd just never seen before. Not in 1929, not in 2000. Nvidia at one point was trading at 36 times revenue, not 36 times earnings, 36 times revenue.
That's crazy.
Now, Scott McNally, the head of Sun Microsystems in 2000, said, look, at 10 times revenue, which is where his stock and a number of the other tech darlings were trading, here's what I'd have to do for you to make a 10% return going forward. I would basically have to give you 100% of my revenue for the next decade, which would be a problem because I would go to jail because I have to pay taxes and pay my employees and pay my suppliers. So I'm not going to do that. And he didn't. And that stock went down 98%
Wow.
to the bottom. NASDAQ went down 84%. And I'm not saying Nvidia is going to go down 99% or 98%. I'm not saying NASDAQ's going to go down 84%. But what I'm saying is we're at valuation levels that make that possible. Well, what would be the trigger? Well, the trigger back in 2001 was economic downturn, right? First quarter was negative. Second quarter was positive. Third quarter was negative, exacerbated by 9/11. And then they called it a recession. And we headed down and, we finished that year down about 14, 15%. And then 2002 was the really bad year because that's when all the fraud came out. WorldCom, Enron, Cisco had to restate all their earnings that weren't real. Like they would write down, this is a great trick. They would write down their inventory to zero. Then they'd resell it later at 100% profit margin. Like you can't do that. That's illegal. But they did it and eventually got caught. So the market collapsed and went down 54% peak to trough, NASDAQ down 84%. And so do I think there are companies like, Super Microcomputer that are cooking the book, shall we say? Yeah. Do I think there are companies like Enron out there? Do I think Nvidia is doing what Cisco did? There's some questions about their relationship with Supermicro. There's some questions about some old inventory of chips that are being replaced by the Blackwells. Again, not accusing anybody of anything. I'm just saying there are some anomalies. So could we see an extension of down markets, public markets? Yeah. The macro tailwinds turned into headwinds. Now there's a thesis that's going around, and I swear it's like, I don't know if you've ever watched the Sunday shows. I don't watch them, they're dumb, but I love when they show the clips of all the people on all the different shows, Meet the Press and all that stuff.
They say the same thing.
Where they say the exact same thing.
Yep.
Like every network, it's like talking points.
It's like a script.
And so like a script, yeah. And somebody did that for this new talking point that Trump is engineering a crash so that he'll force Powell's hand to cut rates
Seen that.
so they can refinance the debt so we don't go bankrupt.
That's got to be the dumbest narrative I've heard of in a minute. And you know what? Trump's got such a big ego and it feels like he can control everything. I just feel like if Trump really wanted to put pressure on Jerome Powell, he would just call him out. He'd just grab a microphone and be like, "Hey, we want you to cut rates. Like we demand it." I don't know.
No,
I feel like
what
that's how he
did.
operates.
No, look, to your point, that's what he did the first time. Remember, he got inaugurated in 17,
Yep.
and he said, "Hey, Jerome," because remember back then Jerome was Jerome the Hawk.
Yes.
I'm going to raise interest rates,
Yep.
because Yellen was so bad, and Trump did exactly what you say. Got on the microphone and said, "Hey, idiot face, you need to turn back into Jay the Dove." And Jerome was like, I do not. I'm in charge. You can't fire me. And he did. He raised rates and the market crashed. And they said, "Oh, my bad." And he turned not just into Jay the Dove,
Whoops.
but then he turned into Jay, just the letter J, the pusher with the hoodie and the backpack, handing out stimmy checks on the corner. And everything looked great for Trump, right? Even though it wasn't Trump, it was the stimmy checks.
Yeah.
And so he tried that again, right? Right after inauguration, he met with Powell and he said, "Hey, I need you to cut rates." And Powell's like, "You're not my boss. The Rothschilds are my boss." And long story short, now the argument is he's trying this. Now, look, we did a webinar about a month ago called Tariffs Everywhere. Did anyone stop to think? Right? From the Rhyme of the Ancient Mariner. And we're doing another one on Thursday, Tariffs Everywhere. Is the investment environment starting to stink? And the problem, as you pointed out correctly, is Trump's ego, right? Like the movie, right? Son, your checks writing, or your body's writing checks, your ego's writing checks your body can't cash. And Trump has this thing about, "I am tariff man." Here's the problem. We have 200 years, not 10, not 20, 200 years of data that says tariffs are and always will be a bad idea. There's no time in history where tariffs are good. Adam Smith was right. Free markets are better. Globalization is better. Nationalism is bad. And so, but he fancies himself this great negotiator. And well, okay, that's fine. But if you play the game of chicken and you make a mistake, you die, right? You hit head on into the other car and you die. That's just a bad game, especially when it's other people's lives and livelihood. So you're laying all these people off. You think you're being the hero. Those are real Americans, right? You may not like them. You may not have the same views or values they have, but they're Americans, just like you and me. And they have kids and they have jobs. And then there are 5 contractors for every government employee that you lay off that are also losing their jobs. And then there's a bunch of other peripheral things like local restaurants and rental companies. And so there's a multiplier effect. And so if you just want to ignore all that, okay, fine, because you're tariff man. But at the end, the problem for me is it is short-term pain and maybe acute pain, particularly for levered longs. But I have to actually acknowledge that it could end up be for long-term gain, right? And what I mean by that is if we can force interest rates down and lower the debt financing cost and lower the deficit, and if we can cut some of the wasteful spending and redirect it into spending on innovation as an asset class and things like Bitcoin layer 2 and layer 3 development, then we can increase GDP and increase profitability and increase productivity, and then we get a better recovery on the other side. So that's the positive part of it. I do think for Bitcoiners, the problem short run is liquidations are bad, right? A stepwise bear market is not bad. right? If stocks and bonds are going down, Bitcoin could still go up because it's not correlated. It doesn't derive its value from the same things that stocks and bonds derive value from: economic growth, interest rates, productivity. It's dependent on millennial adoption, network growth, transaction volume. Those are very different. And so, but in liquidations, right, if you've got levered speculators, so we have the highest level of margin debt in history. When people get a margin call because their Nvidia stock fell 40%, they can't sell the Nvidia stock. They can't sell their Cisco stock. What do they sell? Bonds or Bitcoin.
Yeah.
And so the other problem that we have is just a seasonal problem. Every March, we get a pullback in Bitcoin, particularly bad when the previous year was really good because people have to pay their taxes.
Yeah.
So we had a really great year last year. Taxes are going to be really high. So
Now,
Mark, people are going to have to.
You mentioned
lighten up.
government efficiency, or kind of alluded to it, and what's going on with the economy. What's your kind of takeaway on the U.S. government's position and what that means with Bitcoin? You had that crypto summit last week on Friday with Donald Trump. It was a closed door meeting, but I mean, all the who's who of crypto was there. And all of the cabinet members that are, involved in finance were there as well. What's your kind of outlook on the direction of the U.S., the strategic Bitcoin reserve, the stockpile, the crypto stockpile they have with, some altcoins in there? What's your kind of overall take on all of that?
Hugely positive. Look, I don't believe that Donald Trump is some crypto savant or some Bitcoin soothsayer.
He's been making money on
I'm not even
crypto.
sure he's really a believer, right? He might be, but his kids probably are. But Donald likes votes. And someone told him last summer that, hey, if you go to this thing in Nashville, there's a whole bunch of single issue voters. And if you say these things, here are 6 talking points, you say these things, they will love you. And I was there. I mean, I actually left before he went on because I didn't want to deal with the security. But the amazing thing is the video when he says, and on day 1, I will fire Gary Gensler. And the crowd goes crazy. You could see it in his eyes. He was like, oh my God, that's amazing. I'm going to say that again. And he said it again. And the crowd went even more crazy. He's like, oh, so this is like a drug for Donald. So he's like, okay, I'm going to do this. I'm going to do this. I'm going to free Ross. I'm going to do this. And I'm going to create a strategic Bitcoin reserve. Now, he's able to free Ross. You can do that by executive order. You can say, we're not going to sell the crypto asset stockpile, the things we've seized. You can call it a fancy name. You can do that by executive order. You cannot create a strategic Bitcoin reserve by executive order. That cannot happen. It has to be passed by Congress because it's under the authority of the Treasury. It's like you can't fire Jerome Powell. He doesn't work for you. So there are these things that get in the way of the Donald's agenda, and this is one of them. So rightfully, he calls this meeting and creates a bunch of buzz and hoopla. But the problem is that group of people has no authority. They can't do anything other than say good things and point us in the direction of saying, you know what? The previous administration, I don't even like to call that administration, that previous shit show or what it was. I mean, it was horrible. And look, I'm not independent, but I'm a lifelong Democrat. If you actually look at my track record, but I don't even recognize what that 4 years was. I mean, it was
very
horrific.
strange.
But that complete shit show put in place an anti-innovation, an anti-entrepreneurship, an anti-digitization, like today, the Elizabeth Warren anti-crypto army. I mean, that's just dumb. On no time, again, just like tariffs, there's no time in history where it makes sense to go against innovation and entrepreneurship.
Mark,
There's just not.
I will say that Donald Trump and his cabinet are very they find ways to get things done in a non-traditional method. And you look at what they did with those prisoners that they released, they deported them. They used the Alien Enemies Act of like 1877 or something that hasn't been used since World War II to get what he wanted done. And so part of me thinks that like, hey, maybe sure, you need Congress to pass a bill, but I don't know. Well, one, I do think he's applying pressure on Congress. The Cynthia Lummis bill, it seems like it's being fast tracked, and it's something that if you would have told me, at the Bitcoin conference, I was like, hey, that's years away. But it seems like Cynthia Lummis says she's hopeful that it gets passed and signed into law before the Congress recesses in August, which is only 5 months away. And so is it going to happen this year? It seems possible, if not probable. And I don't know. I don't dismiss Donald Trump finding some loopholes to get that strategic reserve going a little sooner than later.
The problem is to get the funding.
I think it's a great insight, and creativity and interpretation of loopholes has a long history in DC, and the Donald's really good at it, right? I mean, it's like that thing about his tax return. Everyone's like, well, you need to see a tax return. All you need to know is the reason he didn't pay any taxes, he was really good at using loopholes. And look, there's a difference between tax avoidance and tax evasion. One is what every one of us should do. None of us should pay more tax than we have to.
He wants to pay income tax.
But you don't want to,
Mark.
You don't want to
Robin
evade.
Wants to pay income tax.
You don't. No. Look, I love paying taxes.
Yeah.
It beats the alternative. Now, I think there should be no income tax, right? It should be all consumption based because then it would be more fair. But paying taxes is way better than not paying taxes. If I have no income, that's a bad thing. So I'd rather not pay taxes and pay them in other ways, but that's a whole nother story. So, and I'd rather have privatization than public works for most things. But some social safety net is good. But ultimately, here's the thing. We don't need the SBR to get back to the normal high of this cycle, which I don't think we've seen. We are following the normal 4-year cycle. Everyone thinks the 4-year cycle's over. It's not. Humans are going to human. And this is a normal downturn in between, the double top. And just like in 21, where we had the peak in February and then the Elon tweet, and then we troughed in July, and then we cycled all the way to the FTX crescendo. And how far we go above fair value remains to be seen, right? Right now, fair value, somewhere between 85 and 90K, depending on which model you look at. So we're a little bit under fair value. Why are we under fair value? Well, because of the futures market. You still got the whales that can, short the future and push the price down, just like they do in gold. This is the one thing I talk about this a lot, and nobody seems to care. I'm like, when we were declared a commodity, everyone cheered. I'm like, what are you cheering about? You would have much rather been declared a security, right? Because commodities can be manipulated and have been manipulated for decades because of the futures. And what people miss is in 2017, when Bitcoin started to rally, Leo Melamed, chairman of the CME, had a very interesting comment in testimony at Congress. He said, we'll tame Bitcoin. Like, tame, that's a very interesting word. I mean, that's a deliberate choice of word. And sure as shit, they have tamed Bitcoin. How? Well, the first futures were released December 18th, 2018, literally the day of the peak at 20,000. And on January 10th, the day that the ETFs were approved, they approved a whole slew of new futures, shockingly. And what I love is, every 90 days, the 13Fs come out. And everybody pours through them and said, oh, look, Citadel owns all this Bitcoin, or Millennium owns all this Bitcoin. Like, no, they don't. they're short at least an equal amount, sometimes maybe even a little more, against that. That is arbitrage. They buy the future, which is 11, 12, 13% higher than spot, and they roll down the futures curve during the month, and then they redo it the next month, and they lever it up, and they make, obscene profits for free, almost risk-free. Actually, it is risk-free. So that is going to continue for some period of time. And what we need, there you go, Leo, my buddy. And it's a scary word, right? That was not unintentional. That was not random. I mean, that was clear. And it's one of the things about Bitcoin is it is a technology that will, it's a big statement, ultimately replace the base layer of money, which has been gold. And that's a big deal. And ultimately, it will facilitate all of us doing exactly what the white paper said, is having a peer-to-peer electronic transfer of value. No intermediary, no trusted third party skimming $7 trillion a year. And JP Morgan doesn't like that. So they're going to fight against it. And they're going to use people like Leo to fight against it. So it's not surprising that BlackRock has the largest ETF, so that they can be party to these transactions that are trying to tame the price. But there's a group of people, and I think Max even talked about this, that think that, well, this is all part of the plot, right? They're going to get all the Bitcoin and then they're going to seize it. Like, okay, here's two problems with that. Well, a problem and an opportunity. One, the problem is if they could seize it, like literally take it out of the hands of retirees and widows and orphans, because that's what the pension funds are responsible, and those are the ones that have the biggest investments in the ETFs. Even if they could get away from seizing their assets, which I think would be hard even with eminent domain, but let's say they get away with it, as long as they only get less than 100, like if they get 99.99%, all the value of the network goes to the last 0.1%. So as long as there's one of us that doesn't sell,
Michael Saylor,
all the value accrues to them. And that's a really cool thing. So
that's, Mark, that's very interesting. And I'm sorry, but the first person that came to my mind that says if there's one person I wouldn't sell, it's Michael Saylor. You brought up the manipulation with the futures. And when I sat down and talked with you for the Almanac magazine we were doing, we did a write-up with you. And by the way, did you get yours yet?
I have not seen it, but that doesn't mean it's not here. We have this funky thing, right? We used to have, we still have an office. I mean, I'm physically sitting in it, but no one comes in. So it could be that the mail got put somewhere because now my assistant's in South Carolina, and so I will find it.
Yeah, but in that sit down me and you had, I asked you a question. Why do you think the price action has been like this? And exactly what you said is what you said back 7 months ago. I want to get your opinion on one more thing. There's a lot of talk about Bitcoin's 109 was the top. We're actually in a bear market. There's a lot of people posting statistics, metrics, fundamental analysis. What is your thoughts on that? And just as kind of like a little context, maybe if you want to take this into account, but the Fed, they're going into tomorrow's meeting. Inflation is down, unemployment's going up, GDP is shrinking, and there's a credit crunch happening. So all signs are kind of pointing to, all right, might be time to cut interest rates. With that being said, what are your thoughts on where the current market is for Bitcoin? Do you think we're in a bear market? Are we still in a bull market? What's your kind of thesis?
I at least so far, I stand by what I said back in January, which is this cycle will be just like the previous cycles, 4 years. The ultimate peak will be October-ish. Like we lose a month each 4-year cycle. It's kind of like each, we got one every 4 years, we get leap year.
Yeah.
So it's a little less than 4 years in terms of the number of blocks. But, last one was November. I think this one's October. So somewhere between September and November will be the final peak. And I stand by that. I think we're in a natural correction around taxes, exacerbated by this unwinding of the arbitrage around the triple witching last month, where there was, $2 or $3 billion that just unwound and everybody panicked. So I don't think we're in a bear market. Hash rate still at all-time highs. Transaction levels are still good. Wallets still good. So all the fundamentals that I look at, the fair value still looks to be in the mid 80s, high 80s. So I don't think we pulled forward the peak with all the talk of the SBR and everything. And the reason is the peak in each cycle historically has been 2 times fair value. So, back in 13, it was like whatever it was, 2,000 on 1,000, and then it was 20,000 on 10,000, and then it was 60,000 on 30,000. And I think this time it'll be 160, 170 on 85. But I don't think we get to 2 times this time, because I don't think there's as much leverage. So I've been saying 150 feels right to me. Do we have to get there? Can we go to 170? Sure. But somewhere in that range feels right. I think we could be in a kind of bumpy zone between now and July. And then from July till, Halloween, we pump, and then we get into the crazy levered speculative parabolic phase. Now, is it possible that all got pulled forward and that 109 relative to 85 was the peak, and there really was far less leverage, so that was the ebullient, peak above fair value? It's possible. I don't think it's very likely. And I think, again, you don't have to go back many cycles. You can just go back to the last one. We got to 2 times fair value. We dropped 50% to the lows in July, and then we rallied all the way back to make a new high in November before FTX unwound everything. So that's kind of where I come out on it. I don't think we're done for this cycle. I don't think crypto. I did say in January that despite everybody saying the 4-year cycle is over and its number go up forever, that ain't true. Humans are going to human.
Yeah.
We're going to get too far above, and we're going to have another crypto winter. But I think this crypto winter will be less severe, because if we don't go 2 times fair value, we don't have to go down as much to get back to fair value.
Bingo.
Right?
Bingo. And I brought up the idea that what if we're, instead of 4-year long cycles, maybe we go into 2-year long cycles where it's these mini bull and bear markets and Bitcoin and crypto, because at the end of the day, the structure of the markets have completely changed, right? This is the first cycle, and everyone says jokingly, this time is different. But when you look at what is happening, this time actually is different. There's new players in the game. There's new avenues for people to purchase, buy Bitcoin, and soon other cryptocurrencies. We have an Ethereum ETF. There's a Solana, XRP. There's a bunch of altcoin ETFs that are either in the pipeline or waiting to get approved. And so we're going to be even more intertwined with the tendencies of Wall Street. And what we do know is that at a small hint of a recession or a large correction, the Fed steps in, the government steps in, they kind of backstop the losses. And I think essentially Bitcoin and crypto in its whole could be beneficiaries of that as well. Because when I sit there and people say, well, it's too volatile, it goes down 70, 80%, I tell them, I said, if the traditional markets, and this is my perspective, Mark, and let me know if I'm on point or if I'm completely off my rocker here. But if the traditional markets did not have a backstop in the government, the Federal Reserve, and the Treasury, we'd probably see the same thing in stocks and maybe not bonds, but stocks and kind of equities that we do in a true free market like crypto and Bitcoin, where it gets overheated, a big bubble gets created, and that bubble pops, and the cream of the crop rises to the top versus backstops and money flowing in and quantitative easing happening in the traditional markets. So that's kind of my thing.
100%. Look, we've been overvalued in the traditional markets since the global financial crisis, right? Since the rebirth of QE, which was invented in the 1930s, not in 2009. But that's exactly as you described. There is this Fed put that won't allow stocks to go down. Well, why? Because of us.
Yeah.
It's because of the boomers. The boomers control everything, right? We control Congress. We control the Oval Office. The boomers control it. Well, why does that matter? Well, boomers created entitlements. Well, what's an entitlement? An entitlement is a promise you make to yourself that you don't fund and you ask your kids to pay for. Who wouldn't vote for that?
Yeah.
Right? Social Security, Medicaid, Medicare, bring it. Just give me free stuff. Give me free stuff. Okay, well, how do I pay for that? Well, I got a deficit spend, and then if that's not enough because I've devalued the currency, so the purchasing power isn't very good. I have to inflate their 401ks and their homes. And here's the dirty little secret, right? Stocks, before this correction, we're at all-time highs, right? No, they're the same price as 1996. Priced in gold. And now with the move in gold, it's probably back to like 1991.
Yeah.
So if you price stocks in toilet paper, dollars, then they look great. Or houses. I joke all the time. My house here in Chapel Hill, according to Zillow, was up 50% in 2 years. My house did not grow. It did not get more efficient. It actually wore out. I had to put money into it. The money got worse. And the beauty of Bitcoin, and the reason everyone needs to own Bitcoin, one Bitcoin is one Bitcoin.
Yeah.
It will never change. But we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars or yen or euros. And all of those currencies, because of the boomers, will have to devalue. Because once you're massively in debt, you have four choices. You can pay it back.
Not going to happen.
Can't do it.
Yeah.
Can't do it. No, you could tax the wealth of your citizens. Forget their income. You could tax all the wealth. We couldn't pay it back.
Yeah.
You can restructure it. But someone would have to take the other side. And China has always said, hell to the no, and we'll sell all our treasuries before you even have a chance to restructure, which is why long-term rates keep going up, despite the fact that the Fed cut rates.
Yep.
Because China's hitting the sell button. They're playing a different game. Third thing you can do is you can default on it. Hell to the no, because then you get kicked out of office. So only dictators can default on their debt and stay in office. So the fourth is you can devalue it. And that's what every country in history has done. They have devalued, they're overly indebted, and paid back the debt in cheaper currency. So that's what we're going to do. So if you own assets that you can't print, homes, collectible Porsches, stamps, coins. I love the kid. There's this video, it came out again yesterday, maybe because my phone was listening to me talk about it. But I don't know if you play Magic the Gathering, the game, but it's a little card game, right? And so Magic the Gathering, Wizards of the Coast did a Lord of the Rings collab, and they printed a single ring card. So there's only one in the whole world, and this kid opened it, and he happened to be filming, and his hands shaking, because that little piece of cardboard is worth $2.6 million. It's not worth that. Sure it is. Someone will pay him, probably pay him more than that now, because that is a one of one. So anything that's scarce, anything that is denominated in itself will be worth increasing amounts relative to a devaluing currency. So what's going to happen is we're probably going to recess. It'll be shallow, kind of like 2001, not the end of the world. But they will cut rates. By cutting rates, they'll accelerate the money supply creation. That will devalue the dollar, which means Bitcoin prices will rise. Gold is leading that, right? Gold is anticipating that. And of course, the gold bugs like, see, we told you gold is better. Like, yeah, let's look at 5 years or 10 years or 15 years, but you enjoy your 6 months. And I like gold. I don't dislike gold. Look, JP Morgan was right. Gold is money. Everything else is just credit. I will argue Bitcoin is digital gold. Everything else is just credit. And gold is still fine. It's a barbarous relic, having some jewelry or some coins that you can take with you if we get a Mad Max kind of world. That's great. But Bitcoin's better because it's more divisible and more portable. So ultimately, downturn, stocks stop going down because the Fed put, money supply goes up, Bitcoin prices rally, we get a speculative blow off top. We probably have a God candle sometime Labor Day-ish. I mean, and when I say God candle, I mean, I think our biggest candle was $10,600.
Yeah.
I'm talking 20 grand in a day.
Really?
Could happen.
What could be a potential catalyst if you were to kind of try to forecast that?
Cuts, just cuts, more cuts, right? The more cuts, the faster. Because if they were to cut tomorrow, that could trigger a little bit. But like, let's say first quarter GDP really is minus 2.4, 2.5.
Yeah.
And everybody goes, whoa, shit. And let's say they cut 50 basis points in the, August meeting or something. Boom. I mean, that's a rocket ship.
Interesting. Mark, man, always love having you on the show. Thank you so much for joining us. It's always a pleasure. And we look forward to having you on again in the very near future. But in the meantime, my friend, take care and we'll talk soon.
No, thanks for having me. It's always fun. Everyone enjoy March Madness and, cheer for my Tar Heels. Other than the team you cheer for, you're on your own, and have a good one.
Amen to that, you too, brother. Thank you so much.
All right. See you guys.
Take care. There you have it. It's fun to get different perspectives and insights from people that are just have a different level of resources, a different level of kind of people around them, different level of knowledge through their experience. And so we always appreciate our guests joining us. So big thank you to Magic, Internet Money, and Mark Yusko. Hope you guys got some great information out of that. And again, I recommend to do what I do. There's so many good points in there. Go back and watch the segment, and you'll take away something new. But I'm in agreement with Mark, where the bull market is not over. I know the charts and technicals say one thing, but I think, like Mark said, everything is pointing to the Fed cutting rates. And once that happens, it signals to the markets that easy money is coming back, and the prices will start going up. With that being said, we are done for the day. Thank you all so much for watching. Rocco, on behalf of myself and Rocco, we want to thank you all so much for watching today's show. Big thank you to our two guests. Make sure you guys subscribe, add them notification bells, and we'll see you back here in the morning tomorrow. Until then,
crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Name the coin that's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy a dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue.